The following content is a technical analysis on Pacific Gas and Electric, a company of the utility sector in regulated electricity, here off the weekly interval, here off the buyer and seller data off the peak of 2017, where PCG has essentially made minimal progress in reacting and reaching back to those all-time highs, despite indices across the boards coming back to their previous pre-pandemic highs, and they have become the poster boy child representation of the devastating California wildfires, where there is little tangible motivation for the state to assume control of PCG and shoulder the burdens and liabilities that Governor Newsom has raised concerns about. Where there's a mixed bag between speculation, there really are no other companies that are realistically capable of taking over PCG. And within that same breath, there is speculation that the state might indeed opt for a complete takeover due to the recurring destruction that has been caused by a private entity, resulting in an increasing number of casualties and significant harm to the state every single summer and with each passing year, which provides a substantial rationale for the state to consider assuming control and addressing the issue of liability comprehensively. The sentiment from Texas further adds to the dynamic, whereas they had the very harsh winter with a closure of some of the oil structures, and it appears that part of PCG's plan to emerge from bankruptcy really relied on collaborating with the Fed. Given the ongoing lawsuits dating back to the 1800s, the mounting challenges posed by rising gas prices, government regulation, and the rise of green energy, it seems improbable that PCG will ever regain its previous reactionary peak high levels here, returning back to all-time highs, in my opinion. While it is not impossible, the desired rebuild of PCG would likely necessitate a state management, in my opinion. On the other hand, the state has clearly expressed its reluctance to oversee the grid, as corporate manslaughter would be highly detrimental to a governor's reputation. Breaking up the company is also an unviable option, as no entity would be willing to assume responsibility for the high-risk fire areas. Recently, I was reading an article where State Farm Insurance is even withdrawing from California, further complicating the situation, whereas they don't believe the material inputs that are used to reconstruct the insurance claims are just drastically too high, with rising commodities and all the material inputs that are really associated with covering a house of that magnitude of expense. And as a result, I remain open to either possibility, whether one edge of the boat is for a complete state takeover, whereas the other side don't see it happening. And I like to say that the successful traders evaluate potential scenarios rather than fixating on being right or wrong, and it is being open to either possibility that will gain that traction for you. So let us dive right into the technical aspects of this stock here. We'll start off here off the weekly interval. We'll take a zoom in structure here. And what I see here is a pretty clean, I'll zoom out for you, a 3 outside down bearish continuation pattern with a very well-defined structure of that bearish continuation pattern as you can possibly get there. And as I like to say, the longer term intervals usually can overpower some of the near term aspects of where the underlying trend could go. And we'll zoom in now to the daily interval. And what I see here is an additional deliberation bearish continuation pattern where it's losing and waning that momentum. That's as good as you can possibly get there here. So two other interval time realms and dimensions of repeated bearish continuation patterns, and then ultimately what a drop here, a bearish engulfing candle that just dwarfs anything we've seen really within the past month, dating back to the 15th, mid-May here. But that is just an outsized engulfing bearish candlestick pattern there. And here we are, just diving off the 50-day moving average. And I'll give you some key levels now here to watch. And this is what I see here. Primary reactionary high downtrend, uptrend line here off the 2020 pandemic era reactionary lows here. Multitude of reactionary lows across the board there. And here we are. We have a minor uptrend line here right off the mid-August reactionary lows, with bearish and negative divergences that have just really continued to construct and establish here, going back as far as August of 2022, that have only continued to grow much, much larger here. And we're just at a key monumental inflection point, in my opinion, off the daily interval, whereas you have potentially here as darn near as close as you can get exaggerated bearish divergences on the near term. And we are just slowly waiting for a sell signal here of this triple line of inflection points. Call it the 50 exponential moving average, 50-day moving average, and this minor uptrend line. So bear traders, short sellers, they want to see a solid daily candle close below that minor uptrend line here for an exaggerated move down. Long traders, bull traders, they are speculating whether the wildfires are going to resume their trend this summer. And I can all but guarantee you an extreme rush for the exits. All it's going to take is one wildfire based off the responsibility of this company to shit the bed again. And whereas I would envision a rush, an extreme emergency rush for the exits when it comes to bull traders, levered traders that are long in this stock. And again, a sell signal breakdown would potentially do it with this summer looming quite ahead. First days of summer last week, whereas that first target, 1607 price support on a move down for a 5.4% drop, down to 1529 price support for a 9.8% crash, which would ultimately take out that 200-day moving average down to the 1511 price support for an 11% crash, down to 1439 for a 15.3% crash, and then ultimately 1388, which correlates more than likely with the weekly interval there for an 18.4% crash. A potential revisit, it would take really months on end to reach back all the way down to that 25% crash, down to the back to the reactionary primary uptrend line there. And what ultimately will occur is if we snap this level, if we break down below this level and issue that daily sell signal, you're going to have technical damage occur within the zero threshold line momentum indicators here on both the moving average convergence and oscillators. As for bull traders, dip buyers, they want to see a defense of this key inflection point. They want to burn out these bearish divergences that have continued to establish here amongst all three technical momentum indicators, and they want to make a move right back up. So they want to take out this inflection point. And if we do get that breakdown sell signal, they want to revert that sell signal. And again, there is nothing more bullish in trading if and when a breakdown sell signal were to occur and bull traders heavily defend that sell signal for a march right back above, potentially aiming up to that first target there for 10.7% in gains up to that 1853 price resistance. They want to ultimately take that inflection point out off the 2020 trough there, and they want to spur life back into these technical momentum indicators for that next move above. And that would a takeout of that resistance would ultimately potentially take out the divergences, burn them off, and shoot for a potential gap fill back to that top of that gap right before COVID and that wildfire crash. We'll see what develops, and I'll keep you updated if any significance in the charts occur.